BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's get started on this morning. In the Eurozone we've got a lot of the PMIs coming out today, and I expect that to be negative across the board for Europe. So we'll be looking for dollar strength just on a fundamental basis, but we're looking at anyway on a technical. So I'm looking at 105.24, 105.3. That's basically where I expect the dollar to run to, get rejected from. Might not get hit exactly on the mark because this is a dollar index, but generally speaking, I think that's where we're going to go. And then only from there, just a pull back, probably back down to the 103. So long as we're above 103, or probably even 103.5 really now. So long as we're above there, we're still bullish and look for continuation anyway. But it nothing goes straight up, nor does it go straight down. So a little bit of a wiggle, a new higher high to form probably a higher low somewhere maybe around this week. But none of this seems to be bothering stocks or gold too much. We're still quite bullish on gold, in all fairness. And for the majority of stocks, we've got oil is obviously bullish as well. So that's not good for the long term. Probably moving into the next quarter, probably towards the end of the year, it's probably going to feed through to the CPI data that spooks the Fed. But that's nothing new. We talk about that all the time. So this is just a brief overview of the situation on a broader context. Let's have a think about Bitcoin then now, because Bitcoin most likely responds to a stronger dollar in the form of a bit more pullback really. So if that is the case, outside of the 4 hourly, which is towards the bottom of the Bollinger Band and looking kind of weak to be fair, all momentum about to move down. However, let's face it, we still have the bullish divergence brewing on the 4 hourly RSI, which does offer a little bit of hopium. Not particularly convinced about it. I mean, this area that we're, I suppose, just sitting around at here, this 25,700-ish zone, I suppose you could consider that to be a horizontal support. Maybe not significant, but you can see how sideways we've been for the most part over last almost 4 weeks really, just been sitting around this level. So if it does break, that's no big deal. We've got these areas down below us that we could expect to see a bounce from. Now the Bollinger Bands on the daily are starting to contract, which would lead to some volatile moves, larger ones, because it is a daily, they offer larger moves. They're not pinching too tight yet, but they are closing in now. They're closing into this lower zone. The wicks basically telling a story around 25,300, and that's at the moment the bottom of the band. The top of the band is 27,100, which is also the 200 exponential moving average. So if we do hang around in this area for a little bit longer, it will just lead to a much larger move. The bullish divergence is still intact on the daily time frame, with the money flow index increasing. The MACD is snaking up, but it's nowhere near the 0 point, so I wouldn't get too excited. So long story short, I think we're at the mercy of the dollar. And with all this news coming through, well, it's not news, all this data coming through about the individual EU countries' PMIs coming out this morning, they're almost all going to be out in the next hour or two. So whatever damage is done on a fundamental basis with those PMIs is all going to be done in the next hour or two. And then from there, we can see if the charts actually have follow through, which I don't think they will immediately. Thou giveth, thou taketh away, in the form of any kind of fundamental pump or FUD. So I expect this is going to be a buy the rumour, sell the news. The news will pump the dollar. The dollar will get rejected later on this afternoon, and whatever dip takes place this morning will, I'm not going to say get bought straight back up and go to the moon, but the dip was likely to bounce at least. And in the case of Bitcoin, that would be another one of these wicks, maybe wicks down towards the bottom of the Bollinger Bands, lower 25,000s, and then sort of bounces back up into this range that we're sitting at right now. Maybe the lowest sort of $26,000 read is where we might end up seeing. So I'll wick down to the bottom and I'll wick back to the top, but effectively staying in the same range. If we do lose the zone though, taking it down to a weekly, there is one area on the chart, on the weekly chart, which is the bottom of the Bollinger Band on a weekly, which sits quite neatly with the 200 exponential on the weekly. It's around 24,700. That would be a decent area to think about stocking up for a long-term position, and so would be a little bit lower than that, which is this horizontal area where these two big candle body tops on the weekly found resistance. So I quite like it for what it's worth. Remember, you buy in the red, when there's blood in the streets, it's time to get greedy, so you might as well take the opportunity as it falls into our laps, and it's probably going to, due to the PMIs that are coming out this morning. Anyway, nothing serious, nothing horrendous. It's really not a big deal at all, and let's just sit back and enjoy the ride. Right, thanks for watching. Hope you have a nice day. Take it easy.